For more on the investment opportunities in uranium, let's bring in Sprott Asset Management CEO John Ciampaglia. The firm manages a physical uranium fund and 2 uranium miner ETFs. John, great to have you with us.
Thanks for having me. And I've been to Cigar Lake, and thankfully I went there in July.
That makes probably a big difference in terms of the temperature. In terms of production, what was surprising is that there's no plans to increase production at a time when there is so much demand. I would imagine that's on purpose, but why not increase at all? And what would it take for them to?
Yeah, you're raising a really good point. It's all about supply discipline. This is an industry that was really on life support for about 10 years after Fukushima. A lot of the best mines, including McArthur River, that Pippa mentioned, went on care and maintenance for a number of years. And so the producers are very careful to ensure that future production is balanced with future demand. So as they build their contract book, which is selling uranium forward to utilities, they then release more production. So it's a careful balancing act to maximize value over the whole cycle. And I think it's just about being disciplined and really maximizing the revenue and earnings they're able to generate in this cycle.
Hey, John, it's Tim. Congrats on the work that Sprott has done in this space for a long time. And now you guys are really in the center of a lot of this. And I guess my question to you is the demand side of this, how much of this is secular and new to your view, at least in terms of the AI and the server and some of that computing dynamic versus really what our global clean energy needs? And ultimately, are the geopolitics the part of this that really are probably going to be pushing long-term contracts, which I know are key to how you're valuing a lot of this much higher?
Yeah, I mean, there's really 3 big drivers that we see. That's, first of all, it's just growing electrification, whether it's from emerging markets, China, India. They still, consume very low levels of electricity per capita relative to the rest of the world. So that's a big driver. We obviously see Western countries that largely ignore the technology for the last 30 years pivoting back for energy security, decarbonization, and obviously growing load growth, which is happening in places like the United States. And then finally, I think the cherry on top is going to be really the next part of the bull market, which is really going to be about the development of small modular reactors, which thankfully big tech companies are really stepping up to the plate here with capital, really helping to validate this technology and get it off the ground, which we need. You see the uranium price, both in the spot price and as well as the term market, slowly moving up over the last few years. It was a very dead in the water commodity back in 2019 and 2020. The price is clearly following kind of a staircase type of situation where pricing is grinding higher. And that's just because there is this demand building. And we need to get higher prices to incentivize the Cameco's of the world and other miners to expand production and build new mines, which is really critical in order to develop the fuel that the world will need in the coming decades.